It's been an unusual week for Paramount Global. Earlier in this week, they had a very unconventional earnings call where it only lasted about 8.5 minutes. They put the CEO, Bob Bakish, out to pasture and formed a new office of the CEO with 3 executives. Now, today, the stock is up 13% on news of yet another offer for acquisition. This offer is a proposed joint venture between Sony and Apollo, which they've proposed that they would buy Paramount for a total of $26 billion in all cash. It has not been made clear exactly how debt will factor into this deal. All the reporting is super vague, which is pretty frustrating for me. But so far, we have the top line number of $26 billion. Apollo themselves made a solo offer for $27 billion earlier that had kind of been not even really considered, just kind of rejected off the bat. So I am curious if this offer is $1 billion lower, why it is that we would, even be entertaining it. But this does come the day before exclusivity with the negotiations with Skydance comes to an end. The exclusivity of that negotiation ends tomorrow, Friday. As far as the specific results themselves, they did report free cash flow that was to the tune of over $200 million for this quarter. And their overall numbers were aided by higher ad rates as well as the Super Bowl. And it looks like they also added some subscribers to Paramount Plus. They grew Paramount Plus from 67.5 million subscribers up to 71 million subscribers, and the loss narrowed to 286 million, which means subscriber count is up, and they're inching ever closer to that break-even and profitability point in the streaming segment, which is a big milestone that I think is going to shore up the future of this business. Now, in the event of an outright buyout, perhaps the future doesn't matter all that much. We could take our windfall and go along our merry way. However, in the event of the Skydance merger, Paramount would continue as a going concern and as a publicly traded business. And in that case, as existing shareholders, we would want that future to look as bright as possible in order to generate us as good a return as possible over time. Now, obviously, the big buyout with the quick windfall would be nice. I certainly wouldn't shake a stick at that. But I think as shareholders, we ought to look into and be prepared for both potential eventualities. And for the record, I do believe that both potential outcomes have the potential to benefit current shareholders, as the Skydance deal does involve a cash infusion and some deleveraging and potentially some better leadership. And, we'd be getting rid of Sherry Redstone, and voting rights would be a little bit more equitable with the other shareholders. So I think there's a lot of positives to that merger going through. Now, granted, yes, an instantaneous windfall from an outright acquisition would be nice. We would get a premium on our shares, and we could take that capital and ride off into the sunset and use it for whatever we want, whether it be other investments or for other things in our lives. And hey, it's always nice to have cold hard cash and to, be able to take a nice big win. Be sure to leave a comment below if you have any Paramount shares, and let me know what you think about the different offers on the table and what you hope happens with this stock. Also, be sure to give me a like for the algorithm, subscribe to the video for more news and updates on stocks just like this one. Make sure to join the Discord link in the description where we discuss these kind of stocks on a daily basis, Paramount, and many more. Also, catch me every Saturday, 8 p.m. Eastern, Cashflow Kings Live, link in the description there as well. Take it easy, everyone.